Good morning everyone and welcome to Morning Markets. Today we're going to look back on data points from the US yesterday, one related to job openings. Okay, looking at the employment data from yesterday, focusing in on the Jolts survey, job openings and labour turnover data. Expectations had been that we would see a further decrease in the number of vacancies in the US economy, so helping the employment situation return to a more normal footing. That wasn't what we saw. Indeed, from the March number of 9.7 million vacancies, we saw an increase in the number of vacancies in the US economy to 10.1 million, indicating that ongoing robustness of the employment backdrop, which is feeding into monetary policy decisions of the Federal Reserve. Now, certainly that 10.1 million was a surprise. We saw strength across a number of areas of the economy that are very much focused to services. That has been the one area that has continued to grow over recent months, and the employment additions very much support that. Also within the data, we get to see those that are voluntarily leaving their work, so have confidence in finding another job. And really when we look at that today as well, remains at a relatively constant level, that 2.4%. That takes us back to levels that we saw pre the COVID pandemic. So again, potentially an indication of a more normalised environment starting to come through in the labour market there. Crucially, just to say, with 10.1 million vacancies, that means there are 1.8 jobs per each unemployed person in the US at this point in time. So an important data point there. I think the other thing to really take from this is the importance of the focus on the non-farm payrolls number tomorrow. If we remember, US unemployment sitting around 3.4, 3.5% today. Be crucial to see how that evolves tomorrow, because that is feeding into how the market is assessing and considering how the Federal Reserve will respond with interest rate increases, or should I say further interest rate increases. We heard from the Vice Chair of the Fed yesterday discussing that if we were to see a pause at the June meeting, we shouldn't interpret that as the end of the hiking cycle in the US. And certainly when we look at the employment situation, it really does continue to support that ongoing strength that we are seeing at this point in time. The other point, just to finish on today, the US debt ceiling. Paul touched on the agreement in principle and detailed that at the beginning of the week. We've started that political process of moving it through the various houses within the US to get that voted into law. We crossed through the House of Representatives yesterday. That was really the first hurdle, but probably seen as the most challenging hurdle to get the deal through. So having been agreed there, it now moves to the Senate for approval, seen as less of a challenge in getting that through the Senate. So we'll continue to report on that, but please do join us again tomorrow. Many thanks.